Imagine what's possible when learning doesn't get in the way of life. At Capella University, our game-changing FlexPath learning format lets you set your own deadlines so you can learn at a time and pace that works for you. It's an education you can tailor to your schedule. That means you don't have to put your life on hold to pursue your professional goals. Instead, enjoy learning your way and earn your degree without missing a beat. A different future is closer than you think with Capella University. Learn more at capella.edu.
Reality radio for a really great future. We're talking real money.
Funny how it works out that if you live long enough, you end up controlling a lot of money, generally speaking, at least generationally, because the biggest bunch of money in the world is in the hands of us baby boomers.
Thank goodness. We know what to do with it.
The greatest generation had most of it before us. And we got started really, really late. I mean, baby boomers, we were a loss. It looked like we were truly a financial lost cause for a while.
But then our parents gave us the money, so we're okay.
They died, gave us the money, and everything worked out. Well, except my parents, my mom's still alive, but there will be nothing.
Yeah. All right. Well, that happens.
There will be nothing.
I got money, but you know what I did with it? I turned it into a company that turned into a pretty good thing. So there you go.
Which company was that?
That was a company called Vestry.
Oh, was that inherited money?
That was inherited money.
Thanks, Colonel Doctor.
Yeah, exactly. So thank them for that.
Mrs. Colonel Doctor.
Exactly. So well done.
Anyway.
But I invested it, right? I did. I used it. I built something, and it turned out to be a good thing.
Okay, so the next generation after us, that's the millennials, right?
Yes, that's
or is that
19, No, Gen X is next after us.
Gen
That's 65 through 1980.
Okay, all of my kids are millennials. My kids are millennials.
Yeah,
80.
Exactly.
Okay.
90.
Then
80,
the next one,
81 through 96. Yeah.
Your youngest is a Gen Z.
Yeah. I have them from all these.
Yeah, he has he even has a kid from the Greatest Generation. I don't know how that worked out.
You don't want to know, actually.
Yeah. He adopted some old man from World War II, and he just kind of, hey, Tommy, want to see my airplane?
Exactly. Still explaining why he left Italy early in 45.
Want to play with my bomber?
Let's leave it at that. So you got all the ages right. Well done. But the point is, we're talking about money in all these ages, and it's fairly shocking, actually.
You mean we're talking about money on a money talk show?
Amazingly enough. So us baby boomers, on average, didn't start investing until age 35. This according to a Wall Street Journal article. This is not our sources. Gen X, 32. Millennials, 25. Gen Zers, on average, start investing at age 19, which might sound great.
Wait a minute. 19?
That's pretty young. That's, pretty young.
Where'd they get the money?
Yeah, well, who knows that?
Mm-hmm. Yeah.
Let's see. Remember
been digging around in mom's top drawer of the dresser looking for
and wasn't
change.
The government giving away money a few years ago too or something, but which apparently had something to do with it. So that's great that they're investing. Wonderful. You get, because we know one thing about, we know more than one thing, but we know one thing for certain. Compound interest is a wonder. Truly a wonder. If you start early and you get that, it's huge, huge, huge advantage. The problem with the folks, the Gen Zers, is who they're using for sources of information, and what they're doing with that information to invest. For example, a 2021 survey of investors by FINRA found that 36% of Gen Zers, that sounds like about a third, trade options.
You and your math. Look at you.
I'm quick. But only for 20 minutes a day.
And that was really close to a third too. And I didn't even have to use my fingers.
I'm going to get my calculator out. But that's kind of shocking. By the way, only 8% of baby boomers have traded options. So we appear to be much safer and saner when it comes to our money.
Have ever?
That's what it says.
Yeah, I have.
That was way back when, though.
Yeah, it was way back when I was stupid.
Man.
When I was like the Gen Zers.
Exactly.
I was young and stupid. And that's what I hope. I hope that this is just a young and
tell you why it won't.
phase.
I'll tell you why it won't.
Why?
Because what they're relying on as information is completely different than what you and I relied on. Now, we relied on what? Reading stuff, radio stuff, TV stuff. That there was a bad information there, but there's a lot more bad information on social media. Remember, about half of them rely on TikTok to figure out how to invest or think that's a good place to go to learn, because what they're learning there is options, but they're also learning margin. It's a quarter of them use margin to make purchases. And for those of you playing from home, margin is a way to lever up your investments, which may feel great when the market's going up.
No, it doesn't. It's not may. It feels great when the market's going up.
What's that thing in your brain? The dopamine. That's right. I mean, it really gets it going. But when it goes down, as people have learned in some of these riskier bets lately, it can be painful. That's problem number two. Number three, and I know we're not supposed to pick on or talk about crypto anymore, but I can't help it. 42% of male Gen Zers have invested in, traded, or used cryptocurrency. So I think, again, my math, I think, is close on this. Almost half have been involved in cryptocurrency. Options, margin, cryptocurrency.
Gee, they all have a common thread running through them.
You're getting it. Yeah. How
many of them spend a great deal of time at the convenience store buying lotto tickets, horse tracks, or at casinos?
Probably not that. Well, the men, of course, because now they're betting on every game.
Exactly what they're doing?
They're betting on, how many touchdown passes that Patrick Mahomes will throw in the Super Bowl, etc. We've talked about.
So, in other words, Gen Z has been gambling since 19.
They've been gambling. They've been following fin-fluencers who have no aspect of truth to them. They're simply pushing a product generally. They are making bets. And, some of these probably pay off, right? They may have bought a cryptocurrency at the right time. Whether they sold it at the right time, I don't know. And some of them probably got lucky and, had an option strike somewhere along the way that worked out as well. But the point is, this is not investing. And you're right. Maybe they wake up at 35 and say, wow, that was crazy. Remember those crazy times when I was doing all that trading? I was on the computer and and now I just need to buy a nice index fund. But I will say it's troubling to read these things. Options, crypto, meme stocks, margin. These are not strategies, Don. These are ideas, right? These are things that come along that people read about and think that I need to be part of. And you don't have to go that far to remember when they were really going crazy in the spring of 2020, right? When people are home, they had money, they had time, and they really made wacky bets at this point. So you want a strategy, not an idea. You want to consider the sources. Again, about half of them use social media for help, but the advice is self-interested and trendy, when instead they should be using a good long-term advice that we try to provide on this program, but we're not the only ones.
One of the problems is that the youngest or younger generations, I guess the youngest now is Gen Alpha.
Yeah.
But the younger,
I don't have a child in that one, so I'm okay for the moment.
Not yet.
I thought you said we were post something.
Post-sex.
So.
What was I going to say? Oh, that they always think that things are different for their generation.
Always.
And that the things that have proven to be effective with older generations are anachronisms to best be avoided because there's something new out there. And an example of, because options have been around for a long time. Yeah. The new is like crypto. That's their new. But they're always believing that things are different this time, that this is a new market paradigm. This was the same thing that happened a lot to millennials and some boomers in the late 90s, early 2000s, when they had the whole thought of the new market paradigm a quarter of a century ago.
Well, they all want to be in on those hot new things, single stock exchange traded funds, leverage exchange traded things that are going to make money more quickly. It's not very interesting to invest for the long haul. And that was one of my messages. While you're young, life is long. So if you have the money and you're investing, then you should be doing the things we mentioned, diversifying, trusting science, and tuning out the noise which for your generation is louder than anybody else's because you got that phone right there with you at all times.
Yeah, that
where all the
information
stuff
is just being
I know.
shoved into
It is.
into the device that never leaves your hand. I think, honestly, eventually it will become fused to your hand.
You won't even have to put it down. You just go, there it is. So that's troubling. I love, again, that they're investing. They're not investing. They're gambling, but they're saving something to put it in markets, but they're doing it in so many ways that is wrong. And I worry that it will be painful and so defeating that they will give up by 30. We've seen that with other people that invested in stocks for a period of time. The market went down. They go, that doesn't work. They put it in something else and it goes down and it doesn't work. And they say, what's the point of all this? I don't make any money when I invest this way.
And yet you would have, it wouldn't be the kind of money that's going to change your life instantly, but it will change your life eventually if you had just, and I literally mean just purchased the Vanguard Total World Stock Index. Just that. If you just did that, you would have made money. And probably long-term, you will. It's fun. I was just looking at crypto. Now, this show was recorded a couple of weeks ago, but I was looking at Bitcoin. Bitcoin's high was in 2024, 25 was about $106,000.
I was going to say 105. Okay.
Yeah. 106,
and now it's at around 90 at the time of recording.
No.
No.
Can you believe? 86.
Whoa.
Wow.
Is that what you want in a currency?
That is a volatile. Currency? Wow, that is volatile.
Yeah. So hopefully you're shorting it somewhere or something. So, yeah.
Whew. Wow. Can you imagine if the dollar did that? So that it literally a month ago, you could walk in and buy a dozen eggs for $10.
I knew you were going to say eggs because that's
dozen
the thing
eggs for
everybody
$10.
Yeah, okay.
And today, that same dozen eggs cost you, well, let's see, at $86,000,
$1.20, $1.30,
$1.30 more.
Yeah,
I mean, just like that. Wow.
Yeah, that is not what you want in a currency. No, they need to come up with a new name. Cryptocurrency. It doesn't work. It doesn't make sense.
Well, I have names, but I call them crypto cons.
This is a family show, so we can't say that. Yeah, exactly.
I'm trying to come up with ones that are alliterative, but anyway, yeah. So hopefully, I'm just hoping that I know millennials have grown up and started investing better. The baby boomers did the same thing.
Yep.
And I'm hoping Gen Z does the same thing eventually. And I'm hopeful. I think that we do as a species tend to learn lessons. It just takes us longer than it sometimes
I
seems
worry
like it should.
Still about what we just talked about 2 minutes ago, that the sources of information and the amount of that information is so poor and so much that it'll be hard to overcome.
Yeah. Who's going to come along and take up fill our shoes?
In this organization?
No, not in this organization, just kind of on the internet, just on podcasts. Who is that going to be? I'm trying to think of who it might be out there. I mean, the closest I come is guys like Joe Salsihai.
Yeah, who's
but he still entertains. The Stacking Benjamins, they still entertain all these wacky beliefs too.
Yep. So, although if you ask him, he believes what we do.
He's smart. Yep. But see, our opinion has always been we don't want to have these people on because they're just going to confuse you.
Yep. Because you're going to say, wait, well, he just said, no, we don't believe him. So good. All right. Question time. Richard from Renton, because it kind of works. Richard from Renton. I have a somewhat large amount of money sitting in an account collecting 4.5%. Is there a better place I should put this money?
Depends on what it's for.
Well, then he also said the winning lotto numbers would be nice too. Thank you. We do those in the paid program, Richard. You got to sign up to be a member for that.
That's the $8,000 a year gold membership.
No, that's my $5 million lifetime.
$5 million gold card.
Gold card.
You could buy Tom's gold card. He's not far from Canada. He doesn't mind going up there.
No, I'll become a Canadian. $5 million. If somebody wants to buy my
better place than 4.5 for liquidity.
Not much. No. Let's just go through it right now. What's
for liquidity? What? No,
right there. That's about what you're getting in high yield savings. That's about what That's about what the 10-year Treasury is right now.
Yep.
That's about what you're getting. I don't even laddering CD. I don't think you're going to get a whole lot more than that either.
I looked at my CD ladder yesterday, and my average is about 4.7.
Yeah, I fell off my CD ladder 2 weeks ago. It was about the same as that too, so it hasn't moved around much. So what did we mention? We mentioned high yield savings. We mentioned
money market accounts.
It's all right around that.
Right
number.
around that.
No, and if it's money you're going to use sometime soon, then I'd want to stay liquid in basically any of those places. But would be fine.
The correct answer still is it depends, and that really depends on what the purpose is for the money. That is the critical factor. What is this money intended to be used for?
Anything longer than short term, that should be invested properly between stocks and bonds.
And my concern is when I hear this question, I have a large amount of money in a savings account.
I see what you're getting at.
My first thought is, just from experience, is I took it out of the stock market because I was afraid it was going to go down. So what should I do with it now?
Because it has to go down because of tariffs and political strife and what's going on in Europe and fill in the blank. It has to go down. And it will go down.
So that has to be the question that needs to be answered before the question can be answered.
How it fits in your overall asset allocation and what the purpose of that money is. Very good, Don. All right. Well, apparently this is a day from Renton, because we got another question from Renton today. Which, Washington. For those of you, that's just down the road here from beautiful Bellevue.
Is trying to still fix all those 737s.
Let's not go there. What do you say? All right.
Do they still have a pile of them parked out there?
No, they finally, because everybody's waiting for them. Alaska's waiting for planes. A lot of people waiting for their planes. So I hope they're in there cranking them out. Okay. Ted, and we know Ted. Ted said, see you at RetireMeet 2025. He came up and said hi at RetireMeet. Thank you, Ted, for that. He writes, since IRMAA is based on income, IRMAA being the
IRMAA's that gold
Medicare.
digger. Yeah.
You remember her.
Yeah, she just only cares about your income. She's not going to date you unless you make a lot of money.
IRMAA is based on income.
White Lotus, ladies.
Can you keep your income intentionally lower by taking less out of your IRA when you retire? Before RMD rules require distribution of your IRA accounts. Or does the IRS see your IRA holdings and force you to withdraw more while you're not RMD age required yet? The answer to that is no. You can keep as much in there as and you can wait until your RMDs, which for those of us born before 1960 is age 73. And then after 1960, you can wait till age 75. So, Ted, you got a long time because Ted's a young guy.
And this points out something we've mentioned over and over and over again in other podcasts, and that is the value of planning when you're getting to retirement.
Yeah.
Because it's things like this that start to really muck up the works. You've got to do some tax planning, some IRMAA planning.
Yeah, because the max, I think, for a couple now is like 190 something. If you go over that in income, then you're going to pay a surcharge. That's what Ted's asking about.
That's IRMAA. Yeah.
That's IRMAA. Yeah. So you'd like to avoid that. You'd like to game your income in a way so you don't have to do that. And that's why one of the reasons I recommend having different, I hate this expression, different buckets of money, right? Pre-tax, post-tax, brokerage, because you can pull from each of those, keep your income under certain levels, both for tax brackets and the nasty visit from the gold digging IRMAA, in a way that will allow you to not go over those things and not pay more in taxes. So sometimes saving in each one of those places can make a lot of sense. But that's a really good question, Ted.
And IRMAA right now, the 2025 number, bear in mind that IRMAA is based on your tax return from 2 years ago.
Yep.
So if your income, you were an individual, filing individual, your income limit is $106,000 from 2023 in 2025.
Yep.
Married filing jointly, it is now $212,000.
Oh, 212. Okay, I thought it was 190 something.
212.
So, okay, so those are numbers to know. But you make such a good point that most people don't think about. When you're getting ready for retirement, you think save, invest. You gotta, when you're the other side, you got to think about the tax planning, because you really don't want to pay more than you have to. Yeah, we're all going to pay our taxes, and we're not telling you to do something tricky to avoid them, but we want to make sure that you don't pay any more than you have to. That's the point.
And that's where planning comes in.
Big deal. Yeah, exactly. By the way, we spoke about that at RetireMeet, which is now available online. You can go watch it, take in whatever speaker. They break it down by speakers. You simply go to retiremeet.com. It's free, so you don't have to pay anything. which reminds me, I got to get the checks for the literacy groups too and get those out here pretty soon. So we'll be doing that. Yeah, we gave away all the money that we collected for the online.
Away.
Yeah, we did it last year with the same two organizations this year. So we'll do that again. So RetireMeet.com. And again, if you want some work on your portfolio, I am again taking meetings. You simply go to talkingrealmoney.com, click on Meet an Advisor, say I want to meet with Tom. I'll be glad to have a chat with you. So I've got some time coming up in the weeks ahead as spring. Thank goodness. The lake is now at a balmy 38 degrees. Still a little cold, but spring's coming. I'll get back in that water soon. But I'd love to talk to you, so take advantage of that as well.
All right. I'm looking on YouTube. RetireMeet is also available on YouTube to watch.
RetireMeet 2025?
2025. I'm looking right at it.
Wow. So it's up there? How many views? 4 views?
It just went up as we're recording this today.
Yeah.
Just went up.
So
let's see. I'm looking for you. Hold on. Oh, darn it. Oh,
no, I'm ahead of you.
Oh,
this is great news for me.
You're ahead of Apollo Lupescu, too.
Oh, man, this is my... Can we shut it down
right
now?
You're ahead of everybody.
Can we just shut it down right now so I end up being first?
You have 47 views.
I'll tell you, I got to quit going there every 30 seconds, I guess. Quit clicking on it. So,
wow, look at that. And number 2 is Jason Gentile.
Now we know the numbers aren't real in that case, so...
And then Apollo.
Oh, wow. No. It'll turn out differently, trust me.
I'm bummed.
Don is going back in his closet, locking the door, turning
Although I
lights
did
on.
get more than Joe Saul Seahigh. So, okay.
More than Joe. Better than
I'm
Joe.
good.
That's all you
Better
need
than
to know.
Joe.
So you could go to YouTube to watch it. You can go to RetireMeet.com. I think you can also go to ApellaWealth.com and click on events. You can watch it from there. So any place, plethora.
Yeah, there I am.
Opportunity.
Yeah, there I am.
Feel good?
That.
You good?
Right.
You're up on the web? Feel nice now?
I'm feeling great.
I did watch the intro because I think you laughed at one of my jokes. So it just made me feel good to watch that, just to see you do that. So I felt better about myself.
Oh, yeah, there I am on stage.
Yeah.
With you.
Exactly.
Pandering to you.
Thank you.
You're welcome.
I'll take
My
every
pleasure.
pander I can get at this time.
Yeah, there we are. I'm watching it right now as we speak.
There you go.
All right.
Can you watch it with your glasses on and see what happens?
I can.
10 feet tall
I can watch it in my Vision Pro.
I don't know. Sounds a little too close and personal to me.
Yeah, the quality is, let's see, what is the maximum playback quality? Oh, yeah, the maximum playback quality is only 1080p, so it's not really 4K.
Yeah. So okay.
It's only a mediocre quality.
Speaking from my past, I look better in 2K than 4K. So
I look better on the old black and white screens. You know, the little round ones. I look great on those.
Black and white screens. Yeah, I got one in my basement. Come on over.
You know,
watch
the 1955 Philco.
Yeah, exactly. I know what you're talking about. I'm old enough to remember that, but okay, fair enough.
All right, we got to go.
Yeah, we do. Thank you for joining us.
Go to talkingrealmoney.com, send in your questions. Oh, yeah, call us on Saturdays, too, when we do a live show. You can talk to us live at 855-935-TALK. That's 3 to 5 Eastern time on Saturdays, 855-935-8255. And literally, we will, at that point, be talking real money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Apella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.